Hi, thanks for tuning in. Today I'm going to go over the two types of waves that we have in Elliott Wave. You have motive waves and you have corrective waves. Motive waves are 5-wave moves in the direction of the overall macro trend, while corrective waves are counter trend or opposite to the dominant trend and come in the variation of 3-wave moves. Every corrective wave is either a 3-3-5 correction or a 5-3-5. Some of the rules here for your impulse are that wave 1, 3, and 5 must all be 5-wave moves. Wave 2 cannot retrace more than the beginning of wave 1. Wave 3 doesn't necessarily have to be the longest, but it cannot be the shortest. Wave 4 cannot overlap with wave 1. That would be like this coming down here. And wave 5 needs to end with some form of momentum divergence, and you can use MACD, RSI, I use PPO. The way that we project price movement is with Fibonacci tools. And there are two types of Fibonacci tools. There's an extension tool, and there's a retracement tool. So to find the wave 2 projection, you must have the wave 1 completed wave in the books. You then go to the origin of the wave and go to the ending point and put in your retracement tool, and wave 2 then becomes 50%, 61%, 76%, or 85.4% of wave 1. I've actually seen 25%, even smaller than the 50% required. So it's not a hard fast rule. A lot of these aren't set in stone rules, but you do like to look for consistency. Once you have your wave 2 low, we then use the extension tool, and in TrendSpider it's over here. You go to the origin, the peak of wave 1, the trough of wave 2, and then you look for 1618, 2, 2618, or 3236. So 1618, 2, 2618, so let's fix this, and then 3236. So you get this little grid here where we would anticipate wave 3 to end. And same thing with wave 2. You cannot have wave 2 low projections until wave 1 is complete. You cannot have wave 3 projections until wave 1, 2 is complete. And the best way to determine when wave 1, 2 is complete is when price breaks above that horizontal level. Right here will tell you specifically when you close above this level, the wave 1 high, for days and weeks, you'll find price acceptance above that level, and that's the obvious indication that you're in wave 3. Once you have that, you can start to take a look at some projections for wave 3 targets and start to look for structure for wave 3. Look for divergence, because there will be a wave 5 of wave 3, momentum divergence, etc. You can find clues on the hourly and daily charts if you're trading weekly, and so on. So try to zoom in and look for that divergence so you can get clues that you're starting to top. Once you have the wave 3 top, a sign and signal that it is in, you can come in, put your retracement tool in, and wave 4 will be 14, 23, 38, but no more than 50% of wave 3. I'm not sure how steadfast that no more than 50% rule is, but it's definitely a rule that's in the Elliott Wave rule book that I use, so I like to follow it more often than not. Once you have your wave 4 in, same thing with this scenario here with wave 1, wave 2. Once you get above this level and find price acceptance, you can put your stop below it, and look for a wave 5 target. Wave 5 will have 3 different ways of measuring it. First is wave 5 is the inverse retracement of wave 4, so something like this, where you put up this 1, 2, 3, 6 and 1, 6, 8. So look for a short wave 5. You also have the symmetrical wave 5 and wave 1 equaling the same, something like that. So those are generally the two that I see the most of. Once you have a 5-wave move complete, you anticipate that you're going to get one of these two patterns more often than not, a zigzag or a flat. And if it's not exactly these two patterns, maybe it's some complex correction, you will still include a flat or a zigzag within that correction anyways. So these are the two that you really need to master. And these are both corrective 3-wave structures labeled ABC that move in the opposite direction of the dominant trend. Wave C always subdivides into a 5-wave move, either an impulse or a diagonal. And wave B can be any corrective structure. So wave B can be a triangle. The zigzag is a 5-3-5 structure, while the flat is a 3-3-5 structure. And until you have wave 5 in the books, a lower high, and then break the A low, only at this point here will you have confirmation that you're in a C leg low. And when you do have that confirmation, there's no reason to be in this chart anymore, or this chart pattern anymore, at least from the long side. You will also have a confirmed head and shoulders that everyone talks about. That's really just a 5-wave pattern that ends and a corrective ABC pattern. Once you have this zigzag, just like we had the Fibonacci extensions and retracements to help with price projections while within the impulse, you have that same rule, the Fibonacci ratio relationship, while you're within a zigzag or a flat. And the rules for the zigzag are pretty simple here. Wave B is 50%, 61, 76, or 85 of wave A. So if we were to use this same tool here, get rid of these extensions. See, she retraced 61% of that, wave A. And then wave C is 61, 100, or 1, 2, 3 of wave A. So for that, we use our Fib extension tool, plug in the A and the B, throw up 61, 100, and 1, 2, 3, 6. And you now have some projections for where you think price would go. And so we would anticipate this to end somewhere around this area here. So the same way that we have these Fibonacci relationships in the zigzag, you have them in the flat as well. And to pull those up, I take them from here, which is Elliott Wave forecast. Right here, the regular flat. Head back over. So we're looking for 90%. See, so the structure here looks more like a rectangle, while this structure looks like a lightning bolt. Because more often than not, you're going to retrace a good amount of this move. And wave C doesn't necessarily have to break the wave A beginning, but more often than not it does. So these are the two patterns that you see all over the place. 5 waves up, 3 waves down in the form of this rectangle look, or 2 triangles. or the 5-wave move up and the 3-wave move down. All of the guidelines and relationships that were discussed in this video can be found over here at Elliott Wave Forecast. And that concludes this video. Hope you have a wonderful day.